Mortgage rates have increased significantly in the recent weeks. So let's just take a look at the Freddie Mac website and let's go back, guys. Let's just go back to September. September 1, the 30-year fixed rate mortgage went from 5.66%. The next week it was at 5.89. The following week, 6.02. And then September 22nd, 6.29. And then a week later, which was just last week, at 6.7. Rates are continuing to rise week after week. So if you're planning to buy a home soon, these rising rates probably leave you with a lot of questions, right? To help you make a more informed decision when you set your home buying plans, in this video, we're gonna go over the impact of rising mortgage rates as it relates to your purchasing power, as well as address the question, are rates gonna go down anytime soon? Hey guys, my name is Jesse Morrison, and we offer a proven and repeatable home sale process that's backed by client results, adding up to 18% more money to your bottom line than traditional real estate agents. If you would like to protect your family and your finances through the home sale process over the coming months, just visit my link in the description below and apply now. Now let's get into it, okay? The first thing we're gonna talk about are the impact of rising mortgage rates. As mortgage rates rise, they impact your purchasing power by raising the cost of buying a home and limiting how much you can comfortably afford. Okay, so let's assume that you want to buy a $900,000 home. According to the San Diego Multiple Listing Service, the median sales price in San Diego County is currently $915,000 as of the most recent data, which was from September 2022. So at that price point, you'll probably need a mortgage of around $800,000. And if you want to keep your monthly mortgage payment under $5,000 a month, here's how your purchasing power can change as mortgage rates climb. All right, so what this graph is, it's the buyer's purchasing power as it relates to mortgage rates and home loan amount, okay? And if we want to keep your payments, under that $5,000 mark, we cannot afford anything in this range of $840,000 mortgage, right? In fact, if we have a mortgage of $820,000, all we can afford is right here under $5,000 is a mortgage rate of 6%. But as mortgage rates climb to 6.25%, now your purchasing power or your loan amount is limited to $800,000. You see that right down here? And let's see here, I'm zooming in here. If mortgage rates went up to 6.5%, now your max loan amount is gonna be $780,000. And then at 6.75%, your max loan amount to stay under $5,000 a month is gonna come all the way over here to $760,000. So as you can see, as rates go up, the amount of money that you're allowed to borrow to keep within your budget comes down, which means we're going to have to look at a different price point of a home that you can afford to buy. Okay, so the next thing I want to address is that big question, are mortgage rates going to be coming down? The rise in mortgage rates and the resulting decrease in purchasing power may leave you wondering, if you should wait for rates to come down before making your purchase. Well, let's look at a recent article by Realtor.com about exactly where rates could go from here. It says this: many homebuyers likely winced on Wednesday upon hearing that the Federal Reserve yet again boosted its short-term interest rates by 0.75 percentage point, which is a move that's pushing mortgage rates through the roof. And the already high rates are just going to get higher. So guys, if you're waiting for the mortgage rates to drop, you may be waiting for a while as the Federal Reserve works to get inflation under control. And if you're considering renting as your alternative while you wait it out, you guys got to remember this, that rents are also going to get more expensive with time as well. Nadia Evangelou, I think is how you pronounce her name. She is a senior economist and director of forecasting at the National Association of Realtors. She says this: there is no doubt that these higher rates hurt housing affordability. Nevertheless, apart from borrowing costs, rents additionally rose at their highest pace in nearly 4 decades. Basically, it is true that it costs more to buy a home today than it did last year, but the same is true for renting. This means either way, you're going to be paying more money. The difference is with home ownership, you also gain equity over time, which will help you grow your net worth. Now the question becomes, what makes more sense for you, right? Look, each person's or family situation is unique. To make the best decision for you specifically, you need to partner with a trusted real estate advisor to explore your options. Again, my name is Jesse Morrison, and we offer a proven and repeatable home sale process that's backed by client results, adding up to 18% more money to your bottom line than traditional real estate agents. If you like to protect your family and your finances through the home sale process over the coming months, just visit the link in the description below and apply now. I look forward to helping.